Hello, everyone. Welcome to the ASEAN webinar series. I'm seeing some people that are still logging in, so we'll wait one more minute and then we'll start our discussion. Thank you very much for joining. Okay, good morning, good afternoon, good evening, everyone. Welcome to the ASEAN webinar series run by the Climate Bonds Initiative on the topic of what is the price benefit for green bonds. Today, we have assembled a distinguished panel of specialists, and we are going to go through the various components of green bond pricing and how they are different from normal bonds and why they are attractive for both issuers and investors. With me today, I have Dr. Shu Tian, Grace, from the Asian Development Bank, Caroline Harrison from the Climate Bonds Initiative, Bram from NN Investment Partners, and Sean Henderson from HSBC. First of all, I will ask each of them to briefly introduce themselves. Grace, please.
Thank you, Cedric. Good afternoon, everyone. I'm Shu Tian from the Asian Development Bank. I'm an economist, and our team works to implement ASEAN Bond Market Initiative. So we try to address development issues in regional bond markets. And then our team also facilitates green bond issuance and related research across the region. Thank you.
Thank you, Grace. Caroline, please.
Good morning or afternoon, everybody. I'm Caroline Harrison from the Climate Bond Initiative. I work in the markets and data team, and I am a green bond pricing analyst. I specifically try to look at green bonds in the primary markets to determine whether investors attach any value to the green label. We have also recently started running a survey series, and in May we published the results of the first Climate Bonds Initiative Green Bonds Treasury Survey, which we will talk about later.
Thank you, Caroline. Bram, please.
Good afternoon and good morning, everybody. My name is Bram. I work at NN Investment Partners, part of NN Group in the Netherlands, one of the biggest insurance companies in the Netherlands. I'm lead portfolio manager for the green bond strategies at NIP. Currently, we're managing 2.5 billion euros in dedicated green bond strategies. We have 3 different green bond funds currently, which are available for investors. So that's a summary of my background.
Thank you, Bram. Sean, please.
Hi, my name is Sean Henderson. I'm co-head of the debt capital markets in Asia Pacific for HSBC. Obviously, HSBC is very active in the G3, but also the local currency markets across Asia Pacific, and a leading underwriter of green and social and sustainability bonds in the region.
Thank you, Sean. During this session, please feel free to ask any questions using the chat room, and we will try to answer them during the discussion. This will be conducted as a question and answer session, and we will go through a few slides to support our discussion. So, sorry, I'm trying to get the right slide on. So the global growth has been very strong for the green bond market. In 2019, we have seen a continuation of the trends that we had seen in prior years. And globally, we reached more than $250 billion of green bonds being issued. And this is true across all regions, with Asia Pacific also displaying a very strong growth. This growth is coming from various types of issuers. including financial corporates and non-financial corporates leading the way in ASEAN, with a sovereign being also an issuer with Indonesia, which issued green sukuk. But also we saw a growth in green loans, in particular, for example, in Singapore, which is dominating the market. In ASEAN, more specifically, we see quite a diversity of different green bonds being issued. The main sectors that dominate are buildings, energy, but we also saw some green bonds for transport, for example, in Thailand, and also from local municipalities, for example, in Vietnam. And there is also a variety of different instruments that have been used in this market, including, for example, green sukuk in Malaysia, or in the case of the Indonesian sovereign issuance. First of all, we would like to go through the basic terms about green bond and bond pricing in specifically. As we will be using some technical words, we want to make sure that everybody in the audience understand what they are. So briefly, we will go through a few of them. A bond is a debt security with initially some costs associated with their issuance. These costs can be legal costs, marketing costs, information costs, as an issuer needs to work through the different parameters of coming to market for investors. Traditionally, bonds are associated with a regular payment, an interest payment that we call the coupon. And at the very start of the bond market in the early 1900s, those coupons were actually pieces of paper that were being detached against payments at the banks. So that's why it's called a coupon. I would like to turn now to Sean to go through the terminology associated with the primary market price. Sean, please.
Sure, thank you. So in terms of establishing the coupon, when you're marketing a bond for the first time, it obviously involves speaking to a lot of different investors and trying to come to a consensus around what is a fair price to issue. Very often that involves, selling the credit story, positioning it versus other bonds in the market as to what is a fair price. And then typically what you'll do is you'll start with an initial price talk, which is only a very sort of rough guidance as to, where you think is a fair price, plus typically a little bit of premium for starting the marketing effort. And then on the basis of that guidance, you tend to find investors come through with indicative orders. So they place their interest into a common book, and the syndicate will then look at that book of orders, and typically a deal that's oversubscribed, for example, we'll tend to find that there's some price tension in the book. So if the deal sees very high demand, you can typically use that to push the price a little bit tighter, and then you'll end up at a fair market price for both the investors and the issuer, which is then set and the deal is considered priced. That final price is the reoffer price. And for many investors in Asia, that's obviously the key focus point as to whether that is a fair price. And likewise for the issuer, that final reoffer price is what they have to pay for the life of the bond. And so that's a huge focus for them in terms of whether green bonds are considered attractive relative to other bonds.
Sean, there is a question coming through on the chat room. Is there a requirement for a benchmark size for a green bond? Can you explain what is a benchmark size and how does it apply in the context of the pricing?
Yeah, so there's two elements to what would be considered benchmark, because it does differ from currency to currency. So the first element is typically whether it actually goes into various indices. And there's a wide number of indices that get used and tracked by the fund management universe. And different sizes would apply. But the other key factor which very often gets referenced as a benchmark size is whether the bond is considered liquid and broadly distributed. So typically that's a key factor for investors who want to trade the bond in secondary. So if there's a broad distribution and a size of, for example, in the US dollar market, some people reference 300, some people reference 500, but any deal larger than benchmark is considered to be likely to be more liquid in the secondary market. I would say that it's not an absolute requirement to do a benchmark size to do something that's green. For example, we did a deal recently for Shinahan that was 50 million and privately placed into a single insurance investor that desperately wanted, a green instrument. So it's not a requirement, but I would say the majority of the issuance is typically benchmark, because benchmark deals is more common than private placements for many of the green investors.
Thank you. There is another question coming through. Is the bond coupon based on the project value? And if not, what is the basis?
Yeah, so it's typically not based on the project value. What it is mostly based on is people's confidence in the ability of the project to repay the coupons and obviously the final principal. So that credit worthiness is very often based on things like, what are the financial credit metrics of the corporate or the project. And then they'll often compare it to something similar. So if a corporate is out there, for example, in a sector like retail, they'll look at other retail companies out there with bonds, and they'll compare them, and they'll say this one's better or worse, and therefore the yield they pay should be lower or higher, respectively. So typically it's based on credit quality rather than evaluation, and that credit quality very often would be involving credit rating agencies to give an objective viewpoint as to that credit quality, but we also see issuance on an unrated basis in selected markets.
Thank you very much. So once the bond is priced and is out of the books of the underwriter, it starts trading on the public market, and investors are buying and selling as they see fit. I would like to turn to Bram. You are a portfolio manager of bonds. So what is the mechanics? What is the secondary market price? How is it formed? And what's your return as an investor?
Well, I think for a green bond, it trades exactly the same as a normal bond. So, buying and selling of bonds goes through the same trading platforms, goes through our own internal same trading desk. So it trades exactly the same way as a normal bond. So that's one point which I really want to emphasize here. Also, and that's maybe what I want to add on the previous points which Sean just mentioned, and that's also a bit related to the coupon and the credit risk. It is also the same as a normal bond from the same issuer. You are facing the full balance sheet of the issuer, not of the project. And that also means that what we are seeing in terms of prices, etc., it normally trades quite close to the other bonds of the issuer, from the same issuer. So, in a nutshell, that is normally how bonds are traded. For our own green bond portfolios, we have dedicated green bond portfolios where we have 100% green bonds in it. We also, the way we trade and manage a portfolio is the same way as a normal portfolio. So from our point of view, the only difference compared to a normal fixed income portfolio is that the universe is different. But the way we manage it, the way we try to achieve performance is all very similar to a normal portfolio. And that also makes it, I think, very attractive to invest in green bonds for a lot of investors. If you already have fixed income securities in your portfolio and really want to greenify your portfolio in a relatively easy way, I would say, then green bonds are the most obvious choice for a lot of investors.
And someone is asking, just to confirm, you said that green bonds trade the same as normal bond, but how do bonds trade in general? Can you just clarify that?
If we buy or sell bonds, we have a trading desk for that internally, where we have dedicated credit traders. And a credit trader, they can go to counterparties, which are, for example, HSBC or BNP. They can trade prices, they can trade bonds with them, and they're normally listed on exchanges like, in London, Frankfurt. And again, I want to emphasize that they will be traded also electronically quite often or through the phone, but they're all listed and traded in the same way as normal bonds.
Thank you very much. I would like to turn to Grace just to clarify one more element, which is how do we compare securities between each other? What is the spread and what is the relative pricing of bonds? Can you just clarify that simply?
Normally, if we compare two bonds that share some certain share same characteristics, we call the difference in their yields the spread, and then the spread actually captures how market price the difference in the bonds.
Thank you. And someone is asking, are you seeing green bonds trading at a premium? And if so, how much and how do you determine fair value? I think that's what we are going to speak about today. But just before that, we would like to mention a few more steps that are required for green bond issuance. And Grace, if you can take us through the additional steps compared to normal bonds when an issuer comes to market.
Okay, thanks. First of all, to issue a green bonds, the issuers needs to identify the projects that is suitable to be issued under the green bond framework, and then they need to identify certain channels that correct information about the project can be collected regularly, and then also they need to make some preparations before the green bond can be issued. For example, they need to set some separate account, and then they need to create some green bond framework internally to be prepared for this green bond issuance. And then after such preparation, they can contact some approved external verifier, and then they need to provide some information to this external verifier so that the verifier can issue a report. Pre-issuance report to the issuer to guarantee that this issuance will be meet certain standard, for example, climate bond standard or certain GBP, green bond principle. So they need to issue some kind of documents to saying that this issuance is compliant with certain standard. And then if some of the issuers wish to obtain a certification from the CBI, they need also to submit related information as well as this verifier's report to CBI. And then after some time, and then the CBI will issue a decision on whether this green bond can be issued under the CBI certificate. And then the issuers can prepare the issuance with their underwriters. This is quite similar to conventional bond issuance. And then the issuance can carry this certified climate bond mark in this market. So investors can identify, oh, this green bond has met certain standard, and then has related information provided to these investors. And then after the issuance, within the 12 months after the issuance, the issuer still needs to submit additional documents and information to the verifier to obtain a post-issuance report. And then the verifier can issue a post-issuance certification to the issuer. And then after that, the issuer also needs to regularly prepare a report to investors and verifiers and the CBI about how the projects is implemented according to what has been noted under this issuance documents, and then to make sure that their usage of the proceeds is aligned with the proper standard and principles. So that is normally the key difference during green bond issuance.
Thank you very much, Grace. This sounds like quite a bit of work, actually. Sean, what do you feel when you speak to companies that want to issue a bond? Is that something that is deterring some issuers to come to the green bond market, or is it now well accepted, do you think?
Well, I think it's a good question. There are certainly some sectors which I find it easier to do the work by virtue of the fact that they have the data already to hand. So for example, renewable energy companies or property companies which are rated by, for example, BCA or some other framework. And I think that's why you're typically seeing those companies use the green bond markets more frequently, because it's quite easy to identify use of proceeds and measure the impact on that use of proceeds to qualify for a green bond. But I think that, you know, the key point around doing the green is beyond just the pricing impact. I think some of the issuers are choosing to do it anyway, because they're finding that it actually creates a much greater transparency on their own ESG frameworks, and the companies actually benefit from that. We've actually done some research which there's a kind of defined halo effect that we found from companies which already issued green bonds, in that the disclosure requirement of issuing the green bonds and the awareness of investors that the company, you know, is following this kind of best-in-class behavior actually creates a much more positive halo effect for investors across the entirety of the spectrum of their outstanding bonds. So I think there's reputational, you know, marketing benefits to show that you are ahead of the game in terms of understanding how ESG is an important factor for investors to take into account. Also, we're finding that many people who do a green bond actually benefit enormously internally, because doing a green bond, what we found is takes the discussion around green and sustainability from a, you know, perhaps a little bit of a niche, you know, kind of part of the company, and it actually operationalizes it. To exercise a green bond, you really need to have every part of the company understanding what the impact is of ESG on the company. So, for example, you know, it also works, for example, with sovereign. So when we did the Indonesia sovereign, you know, when they do a green bond, they actually have to go to every single ministry and understand what projects are we investing in, you know, how does this comply with the targets that we've set in the Paris Agreement, for example, and it really kind of brings to the entirety of a company or the entirety of an administration, you know, what is the ESG and why is it important?
Sean, someone is asking whether the verifier is paid by the issuer, and if it is the case, which it is the case, would there be a clear conflict of interest that many credit rating agencies have in the past been accused of? What would you say to that?
Yeah, look, there's always an element of risk factor around that, but I think that the underlying credibility of the verifiers is incredibly important to them. So we very often see them turn away business or decline to rate something in line with what an issuer would like. So they do have very high standards. And your point around conflict of interest, I guess, is a fair one to some extent. But I think that the well-regarded and well-respected verifiers have got a lot of science that they've put into this. And so it's not something that you can quite simply, you know, ignore. I think they put a lot of work into making sure that there's actually science-based approach to all their verification processes. Yeah.
And someone else is asking, if the verifier is not complying with the green bond framework, what happens? As an underwriter, would you push back on issuers saying that they cannot issue such green bond?
Look, verifiers, I think, are very important to the integrity of the market. I mean, we have seen certain issuances done without verification where it's very clear and obvious, for example, renewable energy companies, but they're very rare, and I think our very strong preference would be for independent verification to make sure that the quality of the market is upheld.
Thank you, Sean. Caroline, you've been doing a lot of work with through the Treasurer survey and the investor survey we did earlier as well. Would you corroborate what Sean is saying?
Yeah, I would say, and Bram, perhaps you could chip in here. Actually, I was thinking of you when Sean was talking, but we did a European Green Bond Investor Survey, which we published in October last year. And what a lot of investors told us, in fact, was that they, in fact, did their own due diligence, and they would only buy bonds when they personally were satisfied with the green credentials and that they met their standards. So Bram, I don't know if you could perhaps corroborate that also. But
yeah, no, exactly. I just wanted to make that point just a minute before that. I think, a green bond can have a CBI certification or a second party opinion paid by the issuer himself. So you could question, okay, how independent is that? But I really see that in exactly the same way as credit ratings work. They're also paid by the issuers. And for investors, you always do your own credit analysis on top of what a credit rating agency is doing. And I think for a green bond, it is exactly the same. You do your own green analysis based on your own green bond beliefs, because they can be different for everybody. That they can differ from country to country. So as an investor, it's just very important not blindly to rely on a self-labeled market and do your own green due diligence. I think that is really crucial as an investor.
Yeah, I definitely concur.
And how much reliant are you on the verifier's report? Because obviously there's always this information bias that the issuer has much more information than you as a portfolio manager. Do you feel that the verifier's role is very important?
It is important because I think, a verifier is to some degree an independent source, and they also have to manage their reputational risk. They cannot say to every green bond, okay, this is good. Well, maybe it's not. That means that they would risk huge reputational risk. So I think it's good. But again, most investors, they look a bit broader. A lot of certifications and second party opinions. And also when you look at CBI certification, CBI certifications focuses only on the assets which are being financed. And I think it's also very important to look at what the broader strategy of the company is. Is that in alignment with the issuance of a green bond? Because what we at least want to avoid is that you buy into a nice CBI certified green bond, and at the same time that issuer is investing 20 billion in fossil fuels. So, it's very good, to have more information, to have more external reviews. But again, you have to look a bit broader and look at the documents and compare that to your own green beliefs in the end.
And where would you draw the line, Bram, when you are facing with an issuer that comes to market? For example, let's say it's a brown issuer, one that has been over the years managing businesses that impact the environment, and yet they come to market with the promise that they want to change and transition to a green strategy. Where do you draw the line? And have you got examples where you have refused to invest in such green bonds?
There is a gray area. So we really look on a case-by-case basis. And I really want to emphasize that we always try to look ahead. We as investors, and I think I'm speaking, in line with a lot of other investors in the green bond market, we really want to support companies who have a very strong transition story in place. So really, we want to look forward. Even if an oil company decides to issue a green bond, if they have a very clear exit strategy for fossil fuels, I'm really happy to support their issuance of the green bond if that helps them to change their business strategy. But of course, there are examples which are a little bit more doubtful. Issuances by some airports, can be questionable. Issuances by some railway companies are a bit questionable if they, for example, at the same time transport a lot of fossil fuel and also issue a green bond. And there are also a couple of countries who are still heavily involved in coal-fired electricity and are not really making steps to go away from that. And at the same time are issuing green bonds. And I'm not mentioning any issuer's name because I'm not allowed to, but I think there are some good examples where you really have to be very careful about what the broader strategy of that issue is really doing. Is it really in alignment with the green bond issuance? And I think overall we reject about 15% of all green bonds issued globally.
Well, that's quite a low number, actually. That means you do trust that green bonds come to market with a fairly good package of credentials. And the other question I wanted to ask you is, what about forward-looking projects? Because some of those projects haven't happened yet. So the green bond framework allows, for example, in the climate bond standards, for 2 years for the investment of proceeds. What happens if the projects don't happen? As an investor, What do you expect from project owners to do?
Yeah, so also here we also try to align the way we look at these green bonds as much as possible with international standards. So we also say, you know, the proceeds have to be invested within 2 years. You never know 100% for sure that the proceeds are really going to be used as promised and committed. In 99% of the cases it is. But sometimes it can happen that the proceeds are being used in a different way, or that the issuer sometimes suddenly changes its strategy and is going to invest more in fossil fuel, which was not expected. So as an investor, yeah, you buy a green bond at issuance, and from that moment onwards, you have to keep on tracking what's happening. And also, you must keep the possibility within your green bond setup to downgrade a green bond to non-green if they do not meet certain credentials. We've done that a few times, and I think it's good and important to keep on tracking also after issuance what's happening with the proceeds and the company itself.
I would like to turn for a minute to Grace, because the Asian Development Bank is a large issuer of green bond, and there's a number of projects that are happening in Asia with the support of ADB. What is the rationale for ADB to issue green bonds, and do you relate with what Bram is saying on the topic?
ADB does issue a few green bonds to facilitate the regional green development. In terms of pricing, from what I learned from our treasury colleagues, actually, maybe because ADB is already AAA, so they didn't find much pricing difference between their green bond issuance and the conventional bond issuance. But from some studies that ADB conducted, especially on the corporate green bond area, there is some kind of significant price difference between conventional bonds and green bonds that share the similar pricing factors. So greenness actually matters here. And then also, even among green bonds, some green bonds that are able to obtain certification or label, or certification like CBI certification, do observe some premium, or actually negative premium is discount compared to other green bonds that share similar attributes. So that is what we observe.
Thank you. And Caroline, do you agree with this information? You also see some large book cover for green bonds compared to vanilla equivalents.
Well, in fact, looking at this slide in front of us just basically summarizes the work that I have done over the past 3 to 4 years on the topic of green bond pricing in the primary market. So most of the work that I do is concentrated on euro denominated and dollar denominated bonds. I choose only the most liquid bonds, which is a minimum size of 500 million. Just so that I get the maximum transparency. So what I do is I match each green bond with vanilla equivalents, and those vanilla equivalents are chosen using very, very strict parameters. So the first thing that I look at is the recency. So I will compare a green bond to a non-green bond that shares many different characteristics, but is issued within the same 3-month window. So the market conditions are broadly similar. I will then match up the credit rating, the sector, and the maturity, because all of these things can impact how a bond prices and how investors receive the bond. So finding the closest matches is the starting point for all my research. So recently, in this current crisis, in fact, and I just wanted to bring this topic up, I have seen a lot of things being written about how green bond indices are performing better than non-green bond indices. And I would just like to alert everybody to the dangers of making those sorts of comparisons, because firstly, the green bond indices that are the most broadly used have much longer duration than non-green bond indices, and this in itself will give you a difference in performance. That is before we even start going into the composition of the index by sector. Green bonds tend to mainly be issued in the financials and real estate sectors and utilities. So there are some sectors, such as Bram pointed out earlier, oil and gas, where there are like literally no green bonds. So you can't really compare the performance of an apple and a banana. And for that reason, I would suggest exercising extreme caution when comparing the performance of a green bond index with a vanilla bond index. So the way that we choose to do it is by just matching up individual bonds. And I believe, with the experience that I've got at looking at bond pricing, that is the most credible and robust methodology to use. So,
Caroline, isn't the argument not right that if investors choose a green bond index, they actually are likely to see more benefits than if they choose a non-green bond index by the virtue of the composition of this index?
Well, in the current climate, yes, because green bonds tend to be issued by organisations that are perhaps much more shockproof, like utilities, as we've said, and banks. They have much more protection naturally from the sort of shocks that we're undergoing at the moment. So yes, obviously the performance would be different, but I'm reading research where that appears to be overlooked by some market participants, and I just want to make it clear that is not how we conduct our work. So just for clarity, remembering that we try to match the parameters of each green bond with each non-green bond, and that therefore means that the observations that we make for bonds that are issued in euros may not be true for bonds that are issued in Asian currencies. So just to briefly summarize the results of the work, bearing all these...
Maybe Caroline, if we can let an investor talk about this. Bram, what do you think of this?
Go ahead.
Yeah, I was already expecting some kind of comment from Caroline, but I do agree that of course you have to be careful by comparing a green bond index to a non-green bond index. There can be a duration difference and country difference, etc. From the other hand, I would really argue that a green bond portfolio will always be different compared to a regular portfolio by nature. And that's good, because if you have a portfolio of green bond issuers, they are more forward-looking, more innovative. Indeed, you won't find a lot of oil companies, maybe one or two, but they are the more innovative ones. So I think by nature, those are exactly the ones you want to have. And to make some simple comparison, year to date, if you compare a corporate green bond portfolio in euros to a regular corporate portfolio, and the duration is exactly the same, a green bond portfolio has outperformed 70 basis points in 4 months. So, maybe that sounds not like a lot, but for a lot of institutional investors in 4 months' time, that makes a huge difference. So I think, there are really good reasons to make those comparisons, but I agree, you have to be careful what you're comparing, but you can make those comparisons.
And Grace, I think you have done some research on that topic. Can you share with us the results of the research you conducted?
Yes, I think our approach is quite similar to what Caroline described. I think that methodology is more relatively makes the benchmark more comparable. So we need to control common factors that affects the pricing, and then we do find actually we compare, instead of comparing conventional versus green bonds. Actually, we compare among green bonds. So some green bonds that carries certifiers or labels seems to be earning a premium in the market, something like 8 bips on average. And then we do find some 30 verifiers, 30 certificate are better recognized by the market, like CBI certificate. From our sample, we see a bit 15 bips discount on this small group of green bonds compared to other similar green bonds.
Thank you, Grace. Sean, I would like to ask you, if you have an issuer that comes to you to issue a green bond, and because they have heard that it's a good value and it's going to be achieving a good price, what would be your recommendation in terms of, what types of investors are they likely to be interested in those bonds? And, should they go for certification or not? And what extra information should they release to market to achieve those objectives?
Sure. So just to clarify, I think some of the points that Bram was making right at the beginning was very clear that normal bond investors will also buy green bonds. So you get all the benefits of having the broad investor distribution that you have on a regular bond, but you have this additional layer of extra investors that will look at a green bond more favorably or will only look at green bonds. And I think that to look at those two elements in turn, you find now there's already a very broad range of the large global investors that put every investor decision through an ESG filter, right? So a green bond makes it a lot easier for them to justify making an investment than something where they have to go and do a lot more digging around the ESG risks relating to that investment. So I think that's certainly a help, even for those that aren't buying it explicitly because it's green. They will typically have larger orders and look at a deal more favorably if it does have a green label. In addition to that, you have specialist investors who actually have bond funds that can only buy green. And those investors are obviously ones that would come into a deal for this, for a green transaction, but you would otherwise miss. And I think that when you're looking at a green deal, you clearly find a broader and deeper pool of investors than for a regular transaction. I do think that there is an amount of work that needs to be done in terms of understanding the story behind it. You will get questions around, what is the underlying impact in terms of carbon, for example. But I think that the work process that you go through particularly when you go through having an independently verified bond, certainly helps a lot with having all the questions required to really be able to market it effectively. So I would definitely say that verification helps both in terms of, having something independently stamped, but also in terms of, understanding the right kind of questions that are going to get asked when you go on a marketing, and also making sure that you've got, accurate answers, and a measurable impact ready to be able to disclose.
And Sean, someone is asking whether to develop the green corporate bond market, it is important to develop the sovereign green bond yield curve as well, because obviously in Asia Pacific, there are a lot of corporations that are in countries where there hasn't been a sovereign green bond, for example. What would you say to that?
I wouldn't actually think it's that important, to be honest, because I think a lot of the pricing that comes from doing a deal will be, very specific to the issuer. So if the issuer can issue in a conventional bond, then they can do a green bond, and you don't necessarily have to have a sovereign curve to allow you to do that. I think that, a sovereign curve for green to allow you to do that. I think what is very helpful though is, if you look at Europe, a lot of the issuance tended to come from sovereigns or agencies, so supranationals, for example. And I think that what that was very helpful in doing is creating a critical mass for the industry, and also creating, a very broad range of investable instruments to promote the development of green funds. Because I think one of the things that we're finding in Asia is there's a relative undersupply of green bonds. And, it's a bit chicken and egg. You kind of need to have enough supply out there for the green funds to be able to market their product, knowing that they've got enough assets that they can purchase. So I think it would be helpful for the sovereigns to issue more in terms of creating enough supply to stimulate the fund management industry, but I'm not necessarily sure that it's required in terms of, allowing a specific corporate or project to issue a green instrument.
And last year, we saw in the Philippines, the Bank of the Philippine Islands go to the Swiss franc market to issue a green bond in Swiss franc. Is that something that is normally happening in the vanilla bond market, or is that new? Does that mean that issuers can actually access new sources of capital?
Yeah, we definitely find that the European market is definitely more sophisticated and deeper and broader as an investor base around ESG risk factors. But I think that the Asian market is changing rapidly. I mean, we're seeing increasing number of issuance in Asian local currencies. So I think it's just a matter that the European markets probably started this journey a little bit earlier, but the Asian markets are certainly catching up extremely fast. And as you can see, one of the first graphs you showed, which was the amount of supply out of Asia, it's actually, comparatively speaking, at least in line with the actual volume of the overall market. So I think it does allow you to access other markets where investors might not otherwise look at your name, but because it's coming in a green format, they've got a greater incentive to do the homework because of a lack of green assets in that market. But broadly speaking, I think it's got an applicability across all the different markets globally.
And Caroline, I think CBI conducted an investor survey which actually showed that investors were looking for more diversity in green bonds.
Yeah, what we found as the result of the investor survey was a woeful shortage of supply for all types of green bonds, in fact. But what investors highlighted as the two main areas where they would like to see more green bond issuance in particular were the non-financial corporates and the sovereigns. So as Sean mentioned, a sovereign can give a lot of momentum to the initiation of dedicated green bond funds because it's a large asset that will allow investors to take a decent position. But the other benefit of having sovereigns issuing is that it acts as a demonstration for smaller issuers and shows that the sovereign is actively supporting the development of this market.
And Bram, what is your view as an investor? Do you think there's enough diversity in the green bond market? And also in Asia, are you comfortable investing in Asian green bonds?
I think diversification has improved significantly in the green bond market over the last couple of years. I think in particular, for example, when you look at some corporate sectors like the telecoms, we really have a green telecom sector now available. There are 5-6 different issuers there. Still, I think for a lot of industrials, so corporates are really producing things, that is where we still see a little bit a gap. And I think, for a lot of these companies, it is sometimes a bit difficult to define what is a green asset and how can they do that. So I think, for example, the development of the EU taxonomy is going to help and stimulate them. And I know for sure that we're also going to see more, from the specific sector going forward, like, for example, car manufacturers. I have to say, I think that the development of the Asian green bond market, particularly over last year, has been a bit disappointing. 2 years ago, we saw China issuing quite a lot. That has stalled a little bit over last year. And also in Europe, we are seeing that a lot of governments, they will announce in the second half of this year their inaugural green bond. So the growth in Europe will continue. We really must try to find a way to increase this issuance in Asia as well. I think, what we are hearing from a lot of our clients, that of course the demand for green funds and strategies in Europe was already there, but it's starting to evolve as well in Asia. Demand is coming, and that also means that issuers should take this more seriously and should help investors to build their green bond portfolios and help them to greenify their asset pool. So I think that
now we had the pandemic crisis come in the way, and we've seen green bond issuance drop quite significantly in March, yet they have rebounded in April as well. Yeah. So do you think this will be a blip historically this year?
I think so. Yeah, no, I think so. I think that I can understand within all the volatility we saw in March, that a lot of issuers have postponed their ideas to issue green debt. As you see, April picked up. I think May also, there was already a strong pickup. Most governments, they have confirmed again that they will issue their first green bond in the second half of the year. And I think, this whole crisis, of course, creates a great opportunity for a lot of issuers to really change the way they spend their money, to change their business profiles. Governments will spend them more money. They also have figured out with all this volatility in the oil price, they maybe want to be less dependent from oil. So I think it also creates opportunities in the long run for a lot of issuers and also governments to change the way they have structured their economy or their business, and issuing of green debt is part of that.
And are you seeing green inflows into your green bond funds? Are you seeing interest from your own clients?
Yeah, that's a good point, because we have seen no change at all in appetite from our clients to invest in green bonds. I think last year we had more than 1 billion euros of inflows. I think that is really continuing, given the interest and the new clients which we are onboarding. And that's not only in Europe, but also in Asia and Latin America. We are starting to see the interest there. So the structural change from investors towards ESG and sustainability has not changed at all. So the flows are continuing.
Sean, do you also see that this market is strong enough to resist the pandemic crisis, and these March numbers will merely be an accident?
Look, I think this will re-intensify focus on the sector for a number of different reasons. I think the first of which is relating specifically to green bonds themselves. One of the pieces of analysis that we found is actually they're much more resilient in a time of crisis. And the reason for that is typically the sector is undersupplied. So if somebody's sitting there trying to create liquidity in their portfolio, they're more reluctant to sell the green bonds because they're harder to replace. So we tend to find that they're actually more stable in the secondary market, and I think that's helpful for issuers to have stable secondaries. I think also as a response to the crisis, you're probably going to find an awful lot of investment in infrastructure and opportunities for governments to move towards a greener economy. And I think that that's going to be very helpful for issuance in the sector. And I think the drop, if you look at the drop, it's clear that there is a big fall. But if you look at the fall in the overall market issuance because of the volatility, it tells a very similar story. So I don't think that fall in March was a green bond story. I think it was really an overall market story. And actually, if you look on the flip side of that, another theme which is closely related to green bonds is obviously sustainability bonds. And if you look at supply and sustainability, that's gone up 76% this year. With a huge number of COVID-19 bonds being issued, where the use of proceeds is less towards green, but more towards alleviating the economic impact of COVID-19. And so I think that as a theme, people are wanting to be a little bit more clear about the use of proceeds and the positive impacts of those proceeds more generally. And I think that applies to green bonds. It applies to social bonds, sustainability bonds. And I think this all kind of ties in together with a very important theme around, investors wanting to be confident that where they're putting their money is going to be acceptable to their core stakeholders.
Thank you, Sean. And Caroline, you've also looked at some of the recent deals, like, for example, the Iberdrola deal in Europe that received some attention because of the interest from investors.
So in Europe, some utility issuers, there are 2 or 3 that I can think of. Iberdrola is one, Engie is another, Tenet is another, who have secondary market green yield curves. And those yield curves trade very closely to the vanilla yield curves of those same organisations. So what this suggests is that those organisations have very well-defined, robust transition strategies that the market appears to like. As Sean touched on earlier, it's often called the green halo effect. So, when we look at these yield curves and we see that they're trading closely, that basically tells us that the investor perception of the organisation overall is that when they buy a bond, they are buying into a green organisation. Iberdrola issued at the beginning of April. They managed to get their bond 11.5 times oversubscribed, almost half of that bond was distributed to investors describing themselves as green, which is the sort of the normal amount that we would expect to see for a green bond. So on average, half of all green bonds in Europe and the US are sold to investors describing themselves as green. So this tells us that the green investor base remains supportive and buoyant of new issuance in this market.
So that means that if I am an issuer and I am looking to issue a green bond, I will achieve a lower cost of capital. Is that correct? My yield curve will fall potentially?
That can never be guaranteed, and we always put caveats around those sort of discussions. What would be the conditions
for that?
The conditions would be more investors want to buy the bond than such that is available. It's a supply and demand discussion that Sean will be able to tell you more about, but we should also be careful because that type of a situation is not exclusive only to green bonds, right? So vanilla bonds can also price inside their own yield curves. So it's not only due to the greenness of the bond, but what we found as the results of our treasurer survey that we published in October, and we spoke to 86 treasurers, was that in fact the preferential pricing of the green bond tends to be more of an ancillary benefit viz the other benefits that an organisation can enjoy as a result of issuing a green bond. So, you know, better relationships with investors, more engagement, better internal communications, an opportunity to communicate to the market that there is a commitment to sustainability and that the company is future-proofing their business and thinking in those terms are things that, from the treasurer perspective, can often be much more valuable than a couple of basis points of pricing improvement. So just to be aware that there are myriad benefits to issuing green bonds.
Sean, can I ask you your opinion?
No, I'd agree 100% with that. I think there's definitely mounting evidence in terms of green bonds trading better over time and also proving to be more resilient in times of volatility. There's more limited evidence of them pricing substantially better in the primary phase. However, you know, as somebody who works in that, you know, on a daily basis, I can clearly tell that the order books tend to be broader, deeper, better quality for a green bond than a non. So it definitely attracts more interest. I think what is true is that when the market is strong and the deal is 4 to 5 times oversubscribed, you know, is that last sort of 10% of investor base going to substantially drive the pricing? Probably not, is the reality of it, because you know, you're finding that when deals are heavily oversubscribed anyway, there's enough investors to achieve a sensible pricing. But once the deal is allocated and you're putting it into those green investors, they tend to be stickier, higher quality investors. And that's where the secondary performance comes in our view. And I think to point out as well, you know, the message that was already being given was that the broader ESG factors that come around with marketing a green bond, I think are valued by all the investor community, pretty much. So I think to have a clear understanding of what is the client's policy on ESG risk factors, how do they manage ESG risk, and particularly if you're in an industry like coal, for example, what's your transition policy, oil and gas, you know, how are you planning to manage your business for the future? All of these are benefits which come through being able to market something which is appropriately structured and thought through. And I think it shows a risk awareness that is valued by all investors. So I think it's difficult to say, here's a primary transaction, here's another one. There's a scientific proof that there's X basis points of saving. But I think there is a very clear benefit in terms of investor depth, quality, diversity, and we believe over time in secondary performance. So I do think it does add up to savings. It's just a little hard to scientifically prove, you know, by looking at individual transactions, which can be very different, even depending on which day you price them.
Bram, what's your opinion? If you are presented with 2 bonds that are similar in characteristics, but one is green and one is not green, under what condition would you prefer a green bond, even if it has a lower return?
Yeah, for me, that's a very simple question. So I would always buy the green bond only because I manage pure green bond portfolio. So I have no choice. So, you know, for me, that is maybe not a question I really can answer because I'm not managing mixed green and versus non-green portfolios. But, you know, I think in the end, you know, if a green bond trades a couple of basis points more expensive, so the yields are a little bit lower, I think a lot of investors, they can live with that. And I think that has changed also compared to a few years ago. A few years ago, every investor would probably say, no, I don't want to buy a green bond, which is a little bit more expensive. A lot of investors, they really want to make a clear allocation to green bonds. They want to make it clear to their stakeholders. And I think a lot of investors also are realizing that if we really want to make this green capital market work, maybe there is a couple of basis points we have to give up to achieve that. And I think a lot of them can live with that. You know, it should not be too much, but a bit of a premium which they are giving up is okay. And I think a lot of investors can live with that.
Thank you. And Grace, to finish with you, IDB is a strong proponent of green bonds in the region. What do you see this market to offer to investors and countries, for that matter, to develop infrastructure?
In terms of Asia, I think, well, as Bram and Shan just mentioned, actually, ASEAN is, many of the regulators is trying to push the development of green bond markets to finance for the green development. I think many of the regulators and policymakers are now aware of the importance of developing a green bond market to facilitate sustainable development, especially in ASEAN. So hopefully we can see more green bond issuance across the region, and then hopefully this will generate a more green development across the region.
Thank you very much. We are already past the hour, so I would like to thank all our panelists for accepting to join me today for this interesting discussion. We've had a lot of questions that unfortunately we didn't have time to answer, but we will revisit them and send you some emails for some of them where we can provide some answers. Please feel free to reach out. We are available if you want to explore more the green bond market, if you are an investor or an issuer for that matter. Thank you again to all of you. Thank you for joining, and we hope to see you soon. I just want to mention that we have another webinar this coming Friday, which will be focusing on the importance of the regulation. How much do regulators need to regulate the green finance market? And we will have 3 representatives from Securities and Exchange Commissions from 3 ASEAN countries, and this webinar will be moderated by Sean Kidney, our CEO. So I please encourage you to join, and it will be another very interesting discussion. Thank you very much. Have a great day, everyone.